had an excellent year in.
Burl, you've got a big portfolio. Listen to this guy.
We had an excellent year in 2010, mainly driven by the gold stocks. Mainly driven by the gold stocks because nobody believed that the gold stocks are going to do gold or gold stocks are going to do anything, and this non-belief led to people climbing on board even late, and which created some fantastic runs on certain stocks. And yes, we have closed out some positions at 100 and whatever percent. It was a very narrow market. If you were a person who had a balanced portfolio, you didn't do very well, because for the whole year of 2010, stock like Bank of Montreal or some of the other banks probably gave you nothing, a bit of a dividend, but didn't make any capital gains. Precious metals have done well, even mining stocks have done well. The other area that didn't do well was the gas stocks, that actually gas itself, natural gas was down for pretty well, but oils have been very flat until about 2 weeks ago, and right now we are switching a number of money that came out of the gold positions into oil stocks. Some of them are $10, $20, $10, $15 stocks that I think probably going to go to $60, $70 because oil is going to start going up again.
Well, now I'm interested. What oil stocks are $10 or $15?
Total Energy, for example, Triton.
Total?
No, not Total. The U.S. This is Total Energy.
You're talking about junior companies.
Junior companies, yeah. Well, that's our $15, mainly junior companies.
And how about natural gas?
And there's some 50-cent stocks that are probably going to go to $2, $3.
By the way, buying the low price 50-cent stocks, they got a lot more room to go up than the other ones.
Natural gas is currently just sitting around and eventually will turn, but right now that's not still yet the place to be in. Our forecast for 2011 is a potentially weak January. Everybody is expecting the market to take off in January, so I'm very, so I think
you
that
gave us a reason why the first few days are going to be soft. What was that reason? Everybody's selling because of taking capital?
Well, at the end of, right now, a lot of people are not selling. Those people who are sitting on huge gains aren't going to sell because they like to show it in their portfolio, how smart they were for having bought this stock at $20, which is now $40. They're not going to sell now because then it doesn't get into their year-end report. So they're going to say, look how smart I was at $20 stock, I'm still owning it at $40. But there probably going to be some selling in early January because at $40 they double their money, so they're not going to wait for forever, even if the stock eventually goes high. So I expect kind of a weakness in early January, but after that I think this will be another buying opportunity for probably some mainly oil stocks, some gold stocks, some things like SNC-Lavalin and CNR. I mean, it's been unbelievable what these stocks have been doing, where the people said, what the hell, airlines and railways, I mean, who the hell wants to buy them? And CNR is up something like 60% or something like that. So there's some amazing prices have happened.
Ron, you
gotta be there.
In New York.
I'm sorry?
You don't buy any equities over the counter?
Oh, yes. In U.S., the U.S. Oil stocks have also just started. Chevron, new recovery high. Exxon, new recovery high. Some of the lower-priced oil stocks in New York are also starting to move. Consumer stocks in the States are still moving. We just discovered today, I looked at a stock whose symbol is EAT, like eat, which is very interesting. It's a company that has a number of joint fast food kind of.
You've been in that for a couple of days. You've been in that for 4 months.
Yeah, that's right. And so a lot of consumer stocks, because that's a safety. A lot of people are still saying, okay, I'm willing to buy, but I want to have some dividends on the side just to be honest, just to get something in case the stock doesn't go up. Yeah, and industrial stocks, one of the most interesting things, if you are at all have a memory to go back to the year 2000, One example, in 2000, Q-Vest was a $75 stock. 2 years ago it was down to 50 cents, something like that. And so, but 2 years ago, after it came down, it started to do what we call base building, and now the stock is finished base building and is starting to move again. So from 2000 to 2008, you lost major money. You probably out of the stock because you were sick and tired of owning it and you wanted to get rid of it, of the old dog. Who the hell wants to own this? I mean, I'm sick and tired of looking at that stock, so finally you sell it. Of course, now's the time when everybody's starting to buy it. So even the high-tech stocks are actually becoming very interesting also. Q-Vest and maybe even good old Microsoft can have a chance. Number of high-tech stocks that were heroes way back are starting. It's 10 years later. It is usual.
It's interesting what you said about yielding and of course the desire to protect